Okay, here we go. How could I not do a video about the terrible, horrible, dysfunctional, and freaking broke pension system? Have you noticed any of my long-term subscribers? You guys have been around a while. I appreciate everyone. I love you guys. Just want to say that. And new people, I love you too. I love all. I want to educate all so we can fix this mess. But you will recall, so my longer term subscribers, I didn't used to talk about the pension system a whole lot. Maybe every great once in a while something would come up. But for the year 2016, how many freaking times have I had to come out here and do a video about the problems with the pension system that are starting to come out like popcorn popping out of a bag? Let me out. I got something to say, says the pension system. We've been bottled up, papered over, accounting fraud, gimmicks, cooking the books, and I'm out. I need to say something. And what they need to say right now, and this is just the top 25 corporate pension plans, are underfunded by over $225 billion. If it said 225 million, I'll be honest, unless it was like one, city or something's pension plan, I would have to ask myself, is that even worth doing a video on one city's pension plan? A few thousand employees or something? No, whatever. Do I want to waste people's time listening to this? No. But the top 25 corporate pension plans, the best ones out there, the biggest, the best funded, are not funded? Are underfunded? By over 225 billion? That is a Big 10-4, good buddy. Massively underfunded public and private pensions and all the risks inherent therein have been a frequent topic of conversation for us recently. Today, Tobias Levkovich at Citigroup published a report pointing out just how dire the situation is for the S&P 500's largest corporate pension funds. The study found that pensions of just the companies in the S&P 500 alone were over $375 billion underfunded at the end of 2015, with the top 25 underfunded plans accounting for over $225 billion of the underfunding. So that's 2015. Zero interest rates, kills the savers, kills the pensions. We're still there. I wonder how 2016's doing. Answer, don't have to wonder at all. Worse than terrible. Okay. Moreover, Citi pointed out that pensions don't seem to be participating in the massive equity rally that has grown ever so bubbly since 2009, an issue we explain in detail here, which they link us to their own article, Pension Duration Dilemma, Why Pension Funds Are Driving the Biggest Bond Bubble in History. Pension underfunding continues to be a major issue for S&P 500 constituents, as very respectable equity market gains over the last 7 years have not substantially alleviated pension pressures. Neither have zero interest rate. The S&P 500 has appreciated by more than 200% at the end of 2015 since the low in March 2009, but the aggregate underfunded status of $376 billion in December 2015 is now 22% higher than the $308 billion underfunding peak seen in December 2008. So hold on a second. 2008, December, we just had the crisis. It was news. $376 billion in December 2015 is now 22% higher than what it was 2008. I thought we were in recovery mode. I thought the bank bailouts, the TARP funds, the backdoor Federal Reserve crap fixed the issue. Don't tell me, they paid it all back. How the hell did we get from 9 point something trillion to 19.3 and growing If you had all that money borrowed into existence, which you did, how in the hell is a little teeny weeny $376 billion of unfunded liabilities in existence? Because all you people that's owed to, you ain't part of the club. The club always gets theirs. They'll get trillions. And they won't even give you millions if they can help it. While the funding status in 2013 recovered by more than $225 billion versus 2012 alongside strengthening equity market performance and a higher discount rate, this trend reversed in 2014 and only improved moderately in 2015. Specifically, the slightly higher discount rate contributed to the progress in 2015's pension funding status, not higher equity prices. And per the table below, S&P 500 corporate pensions went from being fully funded in 2007. They were fully funded in 2007 in aggregate to $375 billion underfunded in just 8 years. How's that recovery working out for you? So we have the 24 million people on food stamps in 2007 turns into almost, not quite, but almost 50 million of the last few years. We have pension system, same time frame, pensions, top 25, completely funded 2007. We got nothing here, no problem. To massively in the red 8 short years later. Well, 9 technically speaking, if you want to be real technical. Wow. The primary problem, of course, is the Fed's low interest rate policies, which are crushing both sides of the pension equation. Pension assets have basically stagnated since 2007, up less than 10%, as pensions struggle to find yield or interest. Meanwhile, lower yields on corporate bonds have driven discount rates through the floor, causing the present value of liabilities to skyrocket over 40% over the same time period. Citi points out that all 10 S&P 500 sectors remain underfunded, with energy continuing to be the least funded sector. The pension review found that only 30 companies within the S&P 500 were fully funded at year-end 2015, with nearly half of the overfunded companies coming from the financials sector. And finally, Citi points out that pensions have been pulling assets out of equities and moving into fixed income, a phenomenon they attribute to pensions being unwilling to allocate assets towards stocks after 2 major equity pullbacks in the past 15 years. But, as we've suggested before, see Pension Duration Dilemma, why pension funds are driving the biggest bond bubble in history. The problem is less likely due to fear of historical equity volatility and more related to a desire to match asset and liability duration. Pension funds appear unwilling to allocate assets towards stocks after 2 major equity pullbacks in the past 15 years clobbered pension programs, leaving allocators and consultants relatively risk adverse, with LDI, or liability-driven investing, taking over the mindset. Equity markets have largely dismissed pension underfunding issues as they reach higher highs every day. That said, at some point, the pension underfunding issue will deteriorate to a level that will be too large to ignore, requiring either massive cuts in benefits for thousands of employees or taxpayer-funded bailouts. We suspect we know which will be the more palatable to our elected officials. How many voters have pensions? Ooh, that's a lot. Ooh, that's a lot, guys. If we don't bail them out, we are not going to be elected. They're not going to vote for us. They won't vote for us. Well, you know what you got? We're going to have to do a bailout, another bailout. Hey, we did it last time. We'll just tell everybody, look, it didn't really hurt you last time. Yeah, the debt went up, but so what? We have a printing press. We print the money. It's okay. If it's okay, why did you force us all to get health care? And if we don't get it, you're making us pay a fine, an income tax. Because if all this doesn't matter, then the income tax that you collect, the extra, shouldn't matter. Matter of fact, come to think of it, none of it should matter if you just have a printing press. So why are we paying any taxes? Oh, shoot. Why did he have to say that? I can't answer that right now. Because he's right. Anyways. I'll end the video like I ended the last pension video and the last pension video before that one. If you get any kind of notice, your pension, we're doing this, we're doing that, your funds are pretty much falling off a cliff. We're willing to settle right now, lump sum. It's way less than you're hoping, but it's what we're offering. You take the money and run. Because, yeah, taxpayer bailouts, they do like to do that. But how many other pension problems have we heard in the last few years, cities, municipalities, etc., where there was no bailout? There was no bailout. Guys, we tried to work with you. We asked you to take a 50% haircut. You said no. It went to the court. Judge sided. Sorry, now you get almost nothing. You should have took the 50% haircut. Oh, well, we couldn't. We had to stand strong. Wasn't no bailout there. Having said that, this also isn't the top 25, $370-something billion in unfunded total. That's not the top 25. That was the other ones included, $375 billion unfunded. That's a tiny bit more than, there's a $500 million issue with this pension fund for the city of whoever, or there's a $6 billion problem with this city, municipality. That's a far cry. But if I ever got a notice like that, settle now, we'll give you the money up front. You don't have to wait for it and get payments. We'll give it to you one shot. I'm telling you exactly what I would do. I would take that money and run to the closest precious metal store or online store. Give me some precious metals. And with a nice chunk of a pension system payment, I'm going to advise you to get some gold with it, because the amount of silver you might be able to buy might be a little too much to be carrying around. Heavy, big amounts, big bars, whatever. Get a couple 1,000 ounces of silver. Buy however many ounces of gold you feel like you could do. Because carrying around, 20 ounces of gold or 2,000 ounces of silver, yeah, not going to be too fun. Just an example. Anyways, if you have a pension, this affects you in some way, I do feel sorry for you. You were promised it. You did everything right. And now you're getting screwed. Welcome to the United States. Proud to be an American. Where's my flag? Hold on, stand by. Oh. Fight for the rights of the pension man. Okay, sorry about that. Fell out of my chair. Till next time. Take care.